Hey YouTubers, welcome back to the channel. This is Everyday Finance and I'm your host Bobby. If this is your first time on the channel, welcome. Thank you so much for taking time out to watch this video. While you're here, if you enjoy this content, be sure to smash that like, subscribe, and don't forget to ring that notification bell so that you'll get updates on future content and videos similar to what you'll see in today's video. For today's video, we're going to talk about Cash App and the IRS, two things that shouldn't mix like water and vinegar. So without further ado, let's go ahead and jump right into it. So Cash App, whether you're a baby boomer, a millennial, or a Gen Xer, we've all used this application to send money back and forth to our family and friends, similar to how our parents or grandparents used Western Union back in the day. Fast forward to 2021, and the American Rescue Plan Act is passed by Joe Biden. Hidden underneath those stimulus payments that a lot of people received was legislation that allowed the IRS to take a closer look at payments that were over $600 or more on these applications. Everyone hates the IRS. They're neck and neck with those robocallers. Still, let's take a look at why this is such a big deal for the IRS. Under the original IRS reporting requirements, people are already supposed to report income of $600 or more, regardless of the transaction type. So this is not a new tax. But many business owners got away with keeping more money in their pocket because initially these apps did not report to the IRS until the transactions were for $20,000 or more. From this perspective, you can see how this creates a loophole for business owners to not pay taxes on income received through these applications. But on the grander scale of things, one has to wonder why the IRS would allow huge companies or corporations who can contribute millions, if not billions of dollars to taxes to not pay a single cent. According to ITEP, or the Institution on Taxation and Economic Policy, 55 corporations paid $0 in federal taxes for the year 2020. In fact, most of these companies received tax benefits or incentives on top of already paying $0 in federal taxes. These companies accounted for $40 billion in unpaid taxes. Oh, and those tax rebates that they received, those totaled over $3.4 billion. Must be good, right? Now let's face it, the vast majority of Americans who use Cash App or applications like it are employed and not self-employed or 1099. For us, any cash that we spend on Cash App or other applications like it would be double taxation. Let me explain. Your gross income that you receive through a paycheck is taxed before you receive those funds or have them allocated to your accounts or however you receive your money. Now, once you take those funds and you transfer them into Cash App, if you're now being taxed again before you can use those funds, then you've been taxed twice. No bueno. If the government wants to stop business owners from being able to pocket funds without taxation, then they should just create business accounts that are more rigorously scrutinized as opposed to regular accounts. Now, I know that sounds simple, but there's rarely anything with the IRS that's quite that simple. And I just want to clarify, this new rule is for people who are self-employed who receive income through these applications, not people who are paying back dinner from the other night or receive money from family or friends. But, and this is a big one, there is a gray area involved. If someone is getting a steady stream of money through these applications, it will appear as business income. And with that, it'll make them more visible to the IRS. For those people, they would receive an information report as well as a 1099 Form K to report any earned income. If a person gets the 1099 Form K and the extra income that they receive through these applications for $600 or more wasn't actual business income, then they don't have to fill out the forms. But in the case that they're audited by the IRS, they would just have to create or show a paper trail that shows that that is not business income or related expenses. Now, for those of us that aren't fluid in taxes or legislation, this can be overwhelming and burdening to a degree. One thing to keep in mind is that $600 amount is annually. It's not semi-monthly, monthly, or quarterly, it's annually. Hence the reason why I said that would be a gray area with this, because even for the most standard of people who use these applications, $600 over a 12-month span is not a lot of money that has been sent or received, especially for people who are using these applications to sell items and complete the transactions. Guys, I know that was a lot of information, but it was good information as well. I wanted you guys to be aware of the changes in legislation that we're currently facing. And with that, if you've enjoyed this content, be sure to smash that like, subscribe, and don't forget to ring that notification bell so that you'll get updates on future content and videos similar to what you saw in today's video. And always remember, guys, there is no goal that is unobtainable when you apply everyday finance. I'll see you guys in the next video.